Good morning, it's Joe Neighbour here from Signal Centre, and today is another opportunity for me to run through my charts on the FX side of things to give you an update on how we see things playing out over the coming days and weeks with regards to the major FX markets that you will follow. So just a quick roundup of the headlines from yesterday and what we've seen overnight. Yesterday we had the CPI number from the US. The inflation data was marginally below expectations, with a retreat in the core measure. The data did provide some relief to risk appetite amid hopes of a less aggressive Fed tightening policy, and we did see the US dollar retreat from 4-month highs, but the losses were fairly limited. So we'll come on to the charts now. In front of you today, I'm starting with the weekly chart on the dollar index, which is always the starting point for my analysis when it comes to foreign exchange. So what we have here at the moment is price range bound between 89.21 to 93.43. Major resistance level at 93.43, which we need to overcome. If we do overcome that, then I think what we have completed on the longer term charts is quite a large double bottom pattern. So what we have here is the two double bottoms highlighted by the green arrows, and then we have the neckline that's formed here at 93.43. If price can get above this level, then I would expect price to continue moving higher. Yes, we may get some sort of pullback to retest what should then be a new support level at 93.43 before an eventual move higher towards 97.66 to 97.72, which is my medium to long-term target on the dollar index. Just looking at this from a daily perspective, quite an interesting setup yesterday. So we've broken out of this wedge, and we hit some resistance at 93.19, and this resistance was formed from the previous high that we posted on the 21st of July. So yesterday what we posted, if you look at the candle, is a bearish outside day candle or an engulfing candle. So we've engulfed all of the previous day's session. We've gone on to hit that resistance, so made a new high, and then closed below the low of the previous day to form this outside candle, which is considered a reversal candle, which may mean that we do actually see some weakness in the short term. I think when you see these big or very clear and obvious support and resistance levels on major markets, then they can do a pretty good job, because obviously they're very well watched, and you'll get a lot of people wanting to support or defend these levels, and we'll come on to that in a moment on Euro US dollar. So for me, in the short term, there could be a little bit of a retreat in the dollar index. I don't envisage it lasting for very long. I am bullish of the dollar index and believe eventually we are going to see a test of this 93.43, and then an eventual break of that to the upside, meaning that we see a continuation higher in the dollar index over the medium term. So just flipping over to euro dollar. So for me, and anybody that's watched these videos will know I've been sort of banging the same drum for quite some time now. I believe this is in the process of forming a large head and shoulders top pattern. Now, arguably, you could say that it completed this head and shoulders top pattern back down here when we actually pierced through the neckline of the head and shoulders, which is drawn on with this dotted line. And again, we broke through this level just on the 6th of August, so just a few days ago, with a really impulsive move to the downside, but we didn't take out these previous lows at the time. So I kind of want to see a combination of breakdowns at the same time simultaneously to really confirm that this top pattern is actually in place. Don't get me wrong, I am bearish and we'll be looking to trade it from the bearish side of things, but really what I want to see is a break of this 117.04 level. So the reason that's important, if we look to the left hand side, we've got these key lows that were posted on the 30th of March. If that level can be taken out and we see probably an increase in volume as well with that, then for me we have completed this top pattern on euro US dollar and can be expecting to see lower prices over the medium term. So I would imagine what we will see is, if this does play out as I expect it to, is the dollar index will complete its double bottom and the euro dollar will complete this top pattern both at the same time. And then we will obviously have that confluence and that combination of signals to believe that we're on the right course and that the trends overall have changed in these markets, and we can actually get some clearly defined trends, which will therefore hopefully be easier for us to trade as traders. So that's my roundup for today on the FX markets. We are pretty close, I think, on some very key and pivotal levels for these FX markets. Just in terms of targets on the downside for euro dollar, when you're looking at head and shoulders top patterns, you take a measurement from the head down to the neckline and you project that lower. So for me, the medium to long-term target on euro US dollar, if we get this break below 117.04, actually comes in at 110.56. So a considerable amount of downside potential on this over the medium term once we complete this head and shoulders top pattern. So be careful if you're trading. As always, we do have some key data points out today. US PPI and initial jobless claims both due out at 1:30 this afternoon. I'm Joe Neighbour, as I mentioned, from Signal Centre, and hopefully that's been useful. I'll be back next week with some more updates on the FX markets. Until then, trade safe. Goodbye.